Okay, team, Nick here. I promised you a video other than the the one I put out to the general public, and here it is. An exhausting week, both mentally and physically, for me. So I'm going to wing it. I don't have much prepared except my thoughts that are in my head. So forgive me if I jump around. Somebody should slap me later. But anyway, the overall week was, felt bullish. Was covered as bullish. But I see a lot of concerns. Obviously, you've read. I sound like a bear, but I'm not. I'm just not an uber bull with what I'm seeing, which fits with the thesis, right? We can creep up. We have room to move up, but I need a catalyst in order to propel us upwards to the super spike that everybody technically is anticipating. With all due respect to technicals, I do like them, I do use them. So anyway, let me start by tackling two things here: the SPX and the RUT. So why don't we jump right into that? Here is the SPX. Boy, that's a busy picture. So let's do the RUT on this side, and I'll try another chart for the SPX. So here's the RUT. And my two blue lines, that's the range where I was banking on, and it's been ping-ponging back and forth between those two. Recently, it had an incredible run-up after an incredible sell-off. And you can see I put that orange line down here for a really steep up, but it's still banging up against that blue line. So technically speaking, somebody can say this is a cup and handle. And I agree with my friend Peter, who is a super technician, who also saw it and mentioned it, I think the day after. But anyway, so here is a cup and handle. And if this comes true, we're up to much higher highs and probably up here in that area, which would make my trade in trouble for December. But I'm not going to wait and see. First of all, we're going to hedge it, and that's one of the questions: is what do you do about a trade that you have so far out? I think Jonathan also asked several times, how come so far out into December? Because I do have a thesis, and this plays out into my overall thesis: is that okay, we're going to creep up, but I failed to see the leap up. Correct, Jonathan? So the creep up. This leaves room for creep up. I mean, that's a nice, healthy move from here. And remember that these were all-time highs. It's not like lower levels from some previous all-time highs. These are already all-time highs. So we need a catalyst. We have headwinds. Mainly is the Fed is they're not going to loosen money. So there's only them interfering negatively. They're not going to interfere positively unless we have a debacle. If we have a debacle, we're going to sell off. So it's almost a sell off situation. It's just a matter of when. I don't anticipate doom sell off unless we have huge headlines that are that something new, a new shoe to drop, so to speak. So let's say I want to defend this position. This position being the RUT December 1260, 1270. I noted that red is where I sell, green is where I buy. So if that's the case, I do have that position open. The percentage of success is low because of the time that's between here and there, but buffer wise it's pretty healthy given the current environment. Now that all can change. So if we took in $2 or $2.50, if we open it now for $3 or whatever the price we get, it trades pretty wide, so it's pretty hard to guess what the exact take on it. I want to hedge it by adding another dollar or two, and I can do that by adding the opposite, which is I noted it with these things, but obviously these would probably give me a dollar. I want more, and this is too much room to the downside. If I don't expect doom, why am I leaving this much room? Correct? So I'm comfortable opening it here myself because I know I can move fast. So that'll give me probably a couple of dollars. I'm just guesstimating here, but the spirit is there. I mean, once I open the trade, you'll know exacts. You won't be given guesstimates. But just to explain the theory, so I want to open a credit put spread, which is the opposite of this credit call spread, which is bearish, right? So credit call spread bearish, credit put spread is bullish. So the total I would have collected, let's say $4. The maximum risk is what now? Anybody? Bueller? No, the maximum risk is $10. It's not $20 because one or the other can lose. They can't both lose at the same time. So let's say the stock goes up to a zillion, only one side loses, so I lose $10. That's the maximum risk. But I've collected four, so I'm only losing $6. It's a lot of money, but I just give you the risk reward. Speaking of reward, if the maximum risk is $6, and I'm collecting four, so that's 4 divided by 6. That's a pretty healthy reward. That's the reward on money at risk. Not a lot of people can claim that. So for a relatively safe trade and slow moving trade, and I don't have to watch it every day. So I'm going to bring in extra money on the bottom. I can also defend it. Somebody else asked today, I think it was Steve, that he didn't understand how I would use debit spreads in order to defend a credit spread. Okay, so let's say I am short credit call spread, so I'm short RUT, and I want to defend it via debit spread. Somebody asked the other day, I think it was Dr. Waleed, he said, well, I don't want, what's the point? I'm making money here, I'm giving it all back there. Well, the point is not to defend with exactly the same one-to-one and not the same time period. So I'll give you an example. If I was short this and I want to defend it and I'm worried about now, a spike now, I would defend it via weekly for $100 or a monthly for a couple $100. And by doing an opposite, I'll do a debit call spread, which is a bullish position because I'll open it up so a little bit over the current level or a little bit higher for cheaper, and this way, if the RUT spikes, if the small caps spike, then this new position, defensive position, will accumulate profits to offset the additional profits, so kind of like stopping the bleeding. And this will give me time to unwind the trade or move it while making some money to offset some of the losses. Make sense? That's one way of doing it. I did it with the Google. I told you I was short. I'm long Google via short puts, leap puts in Google, but that leaves me open to a whoosh down if it goes to zero. Well, I went ahead and bought some July puts for a few $100s to offset, to give me some time to react should anything happen on the Google front. I don't anticipate it. It's probably wasted money, but I sleep much better knowing I have them. Fine, I leave some money on the table. It's part of doing business. It's part of being a successful trader. If you don't leave money on the table, you're cutting too close, and every once in a while you're going to get blown out. So that is the spirit of the RUT trade. I hope it has now a better feel to everybody, and now that you understand the dynamics of it. Yes, I want to add a credit put spread. I was asked several times, is it time, is it time, is it time? I don't see the rush. I will see the rush if we, start knocking on some pretty scary levels, and if we start breaking out of the. Well, anyway, now the reason I don't see a rush because I have conflicting patterns. I see ascending, rising wedges or ish, and which are bearish, and I also see cup and handles which are bullish. But I also see banging up against a channel, sideways channel, banging up against a level where we failed more often than not. So whether exactly at that level or not, like here we didn't fail, but then we busted up open here. I forget what the headline was here, but give me a source of another headline like that. I don't know. I don't see one right now. So it took a big headline to get us up here. What the heck was that headline? What is that? March. I can't remember. So we need another reason, I think. So anyway, I'm going to bank on waiting a little bit in order to feel better about entering a credit put spread. Now, if we get a whoosh down, that'll be outstanding, because then you can either close this for a profit, or if you still like it, just open a juicy credit put spread down here for another $2-3 and risk on, okay, we're going to rebound. The world's not coming to an end. So that's the play on that. Now, another one, I said SPX. We're going to do some, let me see if I can pull up a cleaner. What is that? There we go. All right. So this is an SPX. Can I make this a daily and still make sense? Okay. All right. The SPX is looking also like it's breaking out. Remember here I showed you, come on, let's look at it from the SPY perspective. What's going on? This is live TV, folks. Okay, SPY. You remember the blue the rising wedge? That's bearish usually, but it did break out of it and reverted to it, bounced off. So now like resistance, now is support. That's classic. So it's still looking bullish there. So that's scary a little bit. But I'm not completely convinced that it's time to panic. So I could, if I wanted to protect the SPX and SPX credit call position, I could buy some debit put spreads in the SPY or SPX weeklies in order to help me withstand a July position, for example. Or I could add a credit put spread to it. And somebody aggressive could do it this coming week. They could do it via the SPY or the SPX itself. Now, the bulls are vigorously defending 1950. So if somebody wanted to collect $1 and bank on a bullish week, or at least not a super bearish week, they can sell the SPX and credit plus spread at 1950. Now that's a dangerous move, but I would rather put an iron condor, say at 1925 and maybe 1980, and collect about the same premium and try to range it. That's also a dangerous move. But the point is trying to get some money in before to add to lower your risk for the credit call spread that I had, that one would have in July. So bring in some money now, and all this, because I have that credit call, I wouldn't do this trade without having that credit call spread. So that money that I bring in now can count part of the overall trade. So this is kind of hedging. If I hedge it at 1950 and I'm successful, boy, now my entry point was $1.30, $1.25 or $1.35. So that'd be a healthy risk-reward ratio, and I can withstand a lot of heat, and I can invest some money in defending by buying debit call spread. So hopefully I didn't confuse anybody. The point is, it's not time to panic. I can sell right now a July credit put spread, but I would need to make it. The bulls are still, the bears have not given up on the 1900 line yet. So the fight still is at 1950, and I think it's going to be a stalemate until something gives. Either a headline comes out, and if a headline comes out that's bad geopolitically, we're going to whoosh down. Economically, like China, bad news over the weekend. We have some news coming out over the weekend. That 1950 could look pretty stupid. But take the headlines out, 1950 is going to be a stalemate, and it might go on all of next week. If that's the case, collecting $1 for that would be genius. I haven't done it yet. I'm going to wait until I see Monday what goes on. So, but the fight is still at 1950, and the bears have not given up on the 1900 level. Maybe it's hopium, maybe it's not, but they're still hanging on to it. Now we have other things at play. We have the TLT, the TNX, so the rates are in play. We have the yen, we have the euro. It's all in play, and nobody knows exactly how it's going to go on. But I'm watching all of it to see if we can pick up patterns. At times today we traded with the TLT, and then but then we fell out of sorts. So, but I'm still watching them, and this is next week's strategy for an aggressive trader. If you can actually successfully range the 1950 with some sort of a credit put spread and maybe an iron condor, but it's extremely risky. But then if you pull it off, then if you do have a credit call spread for July, then now you're feeling much better about it. Or you can set a credit put spread for July right now and collect some money. I'll revisit that on Monday. because I don't have clear levels as to what we can collect for that stuff right now. So it's really muddling. We have quarterly expirations too, so the premiums are kind of all over the map, and they don't. You never know what it is until you pull the trigger. So, for example, if I do a 1920, it looks like I could collect 70 cents for it. So, if you think that the SPX is July is not going to break 1920, that's pretty aggressive. Hey, you can collect about 60 to 70 cents right here, right now. Don't know if the premium is there or not, but you can try to do it. So the options are open, so to speak. I don't see a panic yet. Look at these two candles. Let's see if we can draw. That's how I end up with all these lines. I keep drawing lines. But anyway, the SPY shows it better. So the rate is, see that candle there should have been a positive candle yesterday, because they tried to sell it off. It's why it's got a long tail. That's because it opened, they ran it down, but then they recovered, closed in some sort of a doji. That's bullish. Somebody mentioned it. One of our astute members mentioned that it's a doji. It's bullish. It's a bullish doji, I should say, because the market tried to sell it, but then they recovered, and maybe given more time they would have bounced up, and that's why the theory of it is it's going to be bullish the next day. But I expected better action today. So that's weird. What's it showing red here? Anyway, the point is, I'm not panicking if I have a credit call spread yet, because I can close it right now for minimal damage or little no damage. I can add a credit put strip to it right now and collect some income in order to help me bring my break-even level higher in case it continues running up, because I collected 25 cents. If I add another 50 cents to it, now my break-even point is 70 cents. If it starts going up, when it hits 70 cents, I can close the whole thing for even. So no panic yet. All right, having mentioned those two, I think those are on the forefront of everybody's minds. Let's look at the fruit company once again, Apple. I'm not happy with the price action in Apple today at all, at all, at all. So, and if you take a closer look at time frames, it looks head and shoulder-ishy. I mean, that's stretching the head and shoulder concept, but let me see if I can visualize it for you. Head and shoulder pattern, if I put it in plain simple English, then you'll get it, okay? All right, let's do this. This is good enough. All right, so head and shoulder pattern is when it's usually two hats. You get two peaks, which are the shoulders, and then one bigger peak in the middle, which is the head. So you got a peak, a higher peak, and then a lower peak, right? But the spirit of it is not exact. Forget the exactness of it. Like, oh, this was not a neck. It missed it by 50, whatever. The point is you get bullish, and the market runs it up on bullishness. It fails. Then they said, no, we can try again. They run it up again. They get higher, and then it fails. No, we can do it again, and they run it up again. They don't even come close, or they don't match the previous run up, and then they fail. So then that's a sign that the bulls are getting tired. Then the bears take over and they bring it down. So usually that measures, if you measure from the neckline up to the peak, that's about as much of what it's going to lose. So eyeballing, this will come into play, 88 area. Okay, so now this is just speculation on my part. This is head and shoulder in spirit, because they ran it up and failed. They ran it up and failed. They tried to run it up and they're failing. So I said if it gets down to 90, then it tells me that they definitely failed. And today it closed to 90.91. So, it's definitely debatable. It's my loose interpretation of a head and shoulder. That's why I put the ish at the end. I'm not a technical analyst guru, but I do use it in spirit, and that's what it's talking to me now. Google, Let's see if we can get a good picture of the Goog. Google, let's take a look at the Google L. It's a little cleaner to see because of history. Okay, now it's got an area to clear right here. That's a bullish candle right there, the last one. So, but it's at a level where it's had history with recently. So let's see how it handles it this time around. I am long Google, but I would not hesitate to short it in an instant. Today I shorted it via puts. I should have left well enough alone, right? So, and but I may do a credit put spread in it next week, maybe an iron condor. I'll post it so you guys can benefit from that. All right, let's run through a few disappointments. Amazon, boy, that was a heartbreaker, right? They had huge news and then fizzled right out of it. On good days too, we had good strong days, and then it fizzled out. So it's not able to hold its greens. And now it's going to challenge the. I did a write up on it. I think it's coming close to the lower end of that the ascending trend. So as long as it holds that, then it has a chance of recovering. But if it does fail, then I don't know. Maybe it comes back to the 300 again. I said it might lose $10 from that level, so that would put it in the 310, maybe 300 area. I'm not long it. I don't short it. It punishes people that short it. But this is what's going on. It's got a descending range, kind of the blue thing. You can extend it lower, and so just keep that in mind. We did call it down correctly, and hopefully we save some people some money from this head and shoulder. Remember that? That's head and shoulder-ish, and this would be the goal, and I mean the measured move, and it came about. Somebody mentioned Baidu. I haven't traded Baidu in a long time, but it's nice range bound. I expected it to break out, but it failed to break out to the extent I was expecting it. And now it's looking a little bearish, MACD. So I don't short this guy. News come out of China, and we don't control it. But put spreads in it might pay off, especially if the markets falter. Now here it's got a nice trend. Okay, trying to get scientific about that. Anyway, so it's got an ascending trend. I'm doing a left-hand mouse right now, and I've had a little too much coffee. So if this would be an area where technicians will start looking at it, say, okay, if it fails 170, it's breaking the ascending trend of sorts, and then it's falling down. I don't know, higher highs, higher lows, and higher highs, and then but now it recently just started, consistently dropping the highs. So for the last 4 or 5 days, so it might be some disappointments going on there. So keep an eye on it. I haven't traded it because of headlines. I'm not certain of anything over there. Let's see, CF, forget that. CRM is it's just wild day, and then a couple 2 3 4 day of consolidation at a very important level from before. Look at this level. Let's see if we can draw. Forget that extension. Okay, here is where it, that little candle right there. So if we put it right there, it lines up pretty nicely with this failure right here, and this area of failure and bounce right here, and this failure right here. So now we have 3 points. This is a 1 year. We have 3 points that we can look at where we visited this, right? I'm just doing a bigger circle because we can count it, and then down here, and now we're back. What now? Correct? So now would what I say about head and shoulders, right? Head, and depends what happens here. If it drops down to here, we then have a massive shoulder. So then the move, this will bring this back in play eventually. Not right now, but it's on the, if somebody wants to short the market, they can buy puts in it way out there if they're cheap enough for a wild move like this. CMG is one we've covered before. Woo! Oh my gosh. I said right about here, I said it's due for a big move, and I posted a note about that, correct? And I'd say $50 is a big move. But now, what next? We've seen this movie before. Okay, so what next? Let's move back to the circles. We've seen this movie right here. What now? You tell me. Are you bullish? Are you bearish? Can I draw circles down here? Yeah. So, it might consolidate. This guy fell asleep for a long time. Zzz, and then dropped hard. So maybe I'd look at this and see if I can time some sort of a put position going into that. I'm not sure if I want to do that, but they might sell towards it, and then you can take it off before the earnings. That being earnings coming soon. So that is CMG. I would look into probably shorting it via a lotto put spread. Maybe even finance it with a credit put spread here somewhere low. I know a few people play it via credit put spread, so if you got ideas, share them of what you're doing. Goldman. I haven't looked at Goldman in a while. Oh my gosh, that's a rocket ship. Yeah, I missed it. Too bad. But now we're back at a pretty important level here. So let's see how it handles it. Lulu. Painful. Very painful. I'm not touching Lulu anymore. LinkedIn. Okay, LinkedIn is a company that does pretty well. It was a darling in the street. I'm really surprised that it erased a whole year's work right here in this area right there. I don't know what happened. It broke this descending channel and then forget about it. Now it's back to my blue line. Why the blue line? Because again, am I still on circles? Yeah. Because of the number of times we visited and revisited that area. If an area comes back into play often enough, there's a reason for it. I don't know what it is, but there's a reason for it. So I would like to see how it resolves itself here. So let me zoom back into the 1 year. Okay, yeah, now we're trending down again, so that's not good. And this is not looking very good too either. So what about LinkedIn? My opinion with LinkedIn is that it is a company that does well and has an incredible bot system, robot system, creeper or something, because I know they're cheating somehow. I don't know how. I know they're cheating somehow. By cheating, I mean they're doing some stuff in the email and people's address books that they're not supposed to be doing. That's my own speculation. I don't have proof, but I know I used to get emails from people telling me, from friends, they're telling me, oh, this person is looking to hook up with you on LinkedIn, when I didn't even have a LinkedIn account that I knew of. So the count, the number of accounts, active accounts, I think is fudged because I was being counted as an active member, most likely, even though I wasn't. And also, they say, oh, you might know this person. And I was like, how could you tell? I mean, this is from a different email address completely. I mean, anyway, something's going on that's beyond people's imagination there. Hopefully I'm wrong, but that's probably the only risk I see on the stock right now, because right now it's at levels where it almost is a no-brainer. But then again, you add the fact that we're overextended as a market. I don't want to take a risk on LinkedIn. So this is the LinkedIn picture. A good company. They deliver numbers, and they seem to come out with some good stuff all the time. So I don't know why there's no love. And let's see if I can draw a trend line here to see if I can shoot for some levels. Well, it's got ascending higher lows. It looks like it's squeezing. So let's see how that resolves itself, right? So there's definitely a squeeze going on. So let's see how it resolves itself. If you want to take a chance on it at the 130 level, if you can get some premium down there, I wouldn't blame you for it, even at the 140, because that was the recent low, and it looked like it was rejected quite well. with that big candle here. So yeah, credit put spread around here if it pays and if it doesn't have any events. So I wouldn't take that credit put spread if it has an event like earnings. Okay, so find out exactly when earnings is due. Maybe I'll do a write-up on it, or maybe I'll trade it myself and I'll let you know about it. So LinkedIn. Somebody asked about Visa and MasterCard. Thanks for your patience. I haven't answered about those just because they are headlined. And recently, here's MasterCard. I don't like this. Red, red on 2 green days. Recently, the MasterCard Visa headline was positive because Russia lowered something about it. Anyway, so I don't like to get in long these two names right now. I don't want to short them, but I definitely don't want to go long MasterCard or Visa. They both look unloved for one reason or another, and I'm parking them in the penalty box. Somebody mentioned Panera today. Boy, that's ugly. Boy, that is ugly. All right, if I remember correctly, I need to zoom out here and probably to 5 years. Let's zoom out to 5 years. Oh boy. Okay, now having done some FP&A before, so financial planning and analysis, it tells me that a retail company, can get into a toilet bowl type of a drain where you think you can beat the comps, but then you get in a circle and you can't even beat the lowered comps from the year before. So, and once that happens, the bottom is not here. So one thing I like about it is you can see the moves. This is a long move and this long move. What is Fibonacci Queen says? Symmetry. So yes, one can take a bet on it on the upside, but only by lotto. Um, this is looking like the same area, but this is a 5 year. Don't forget. So yes, I would probably be comfortable taking a debit call spread with some time to be proven right, not like for one expiring next week. So going back into the 1 year look of it, I mean, there's nothing pretty here. What are you banking on trying to catch this falling knife? Just 2 candles, 3 candles here that show me an upside. But it's worth a risk if somebody loves the company and knows more about it. But what about these big candles like that? Boy, that is a violent stock. Violent. That's probably why I stopped trading it. So no credit spreads on this bad boy, please. Debit spreads only. Because this is just an undue risk. The only way I would do a credit spread with this one is if I would kind of like a complex 4-legged debit spread made up of a debit spread and a credit spread behind it further away from the money. You know what I mean? So if you want to take a debit spread, theoretically speaking, this is it's going to be like silly, but I've done it before. So if I wanted to do a debit spread here, let's right here, I do that and I pay $2 for it. I'm just making up numbers. I can do a debit call spread. I mean, a credit put spread lower, so the overall risk is contained, theoretically speaking, because I own one that's closer to the money that's an asset, and I have a risk that's further away from the money. So even if it goes to zero, my overall risk is just the cost, just like a regular debit spread. So if I know it's going to drop to 145 and then recover, then I can do a debit put spread to take advantage of that, but I'll also do a credit put spread equal size behind it to offset some of the costs. So then the ideal situation is it drops to 145 just short of my credit put spread, and then it recovers. So this way, that's the ideal situation. Not for me. I'm a simple guy, but one can do that. Netflix, also one that is back in where the street loves it, but pretty important spot. Look at that, huh? So I guess I can move this one up because that was the line in the sand, and see how it handles it up here. And if it doesn't handle it up here, boy, the break is going to be hideous. Not looking good based on this history before. So if one was to want to short the market, maybe Netflix is not a bad thing to do. But again, not credit call spreads. This guy's insane. I would probably do a debit put spread in it Actually, I actually may do that. So if I don't remind you next week, if I don't mention it, somebody remind me, please. So this is the 1 year on the Netflix. It's easier to see that way. Yes, I do definitely like that. So that is Netflix, VMware. I don't know if I need to see that. No, I don't. But remember a head and shoulder-ish situation? So let's say this is a head, I mean a shoulder, that's the head. So run, 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 sell, sell. We'll try it again, and then they beat it. That's, I think that's a J pattern, J hook pattern. So that's bullish pattern. So they try to beat it, they did, and then they sell it off, and then they try to run it up again, but then they fail miserably. And then now what? If this is the case, if this indeed is a head and shoulders, then I would expect it to technically be somewhere, what is that, 90 to 110. So this is not out of the picture. Rough estimates, okay? So remember that. If you see further weakness, it could quickly see the 80 level. It's my opinion. And that's about it as far as running some names down. Did I miss anybody? Hopefully I didn't. It's about 35 minutes into the video. Let's see. Baidu, Twitter. Anybody playing Twitter? Caterpillar? Let's look at Cat. I heard somebody mention it in the news today. God, I love to short this stock. I don't know why it bugs me when it runs up on, maybe because it's old tech. It just bugs me. Oh, speaking of old tech, yeah, I'll cover Oracle too. Very, very strong move today, boy. So, no, I don't want to stand in front of that bus. I'll just let it run for a little bit. Oracle got running out of steam. Ugly reaction to earnings. The street did not like that, although it could have been uglier. The price action intraday wasn't as ugly as it could have been, but still ugly nonetheless. So what now? Okay, anytime a gap like this happens, I look back. Has it happened before to see how it handled it? Here's a gap, and the stock recovered after a couple of days, and then recovered hard. But the gap here must have happened on the pre-announcement or sympathy move with some other earnings, because the earnings day came after it. So I won't look at this one. This is not representative. Here's a gap on earnings, and it's actually bigger. So this is a good comp to look at. It took a few days, but it recovered. So if I was in love with Oracle, I would take debit call spreads in it. Maybe not today, maybe not tomorrow, but if you take them long enough, far enough out, and if you dedicate a few $100s to it, I think they'll pay, unless the whole market falls apart. So on its own, it looks like last time this happened, people came to their senses and bought it back up. But, catching a falling knife, you know what they say, you end up with fewer digits. So that's Oracle. Let me see if I can come up with a couple more. Okay, the NASDAQ today was weakest. It closed barely green, flat. As a matter of fact, it was red almost all day. Here's the NASDAQ. Why am I worried about it? I don't know. It's just because it's mainly dragging by Apple, and it's looking a little toppish. Let me see. I'll use the MNX. It's a clearer. MNX is just a representation of the NDX, and on a smaller scale. But you can see now we've had bunk, 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 knocking on the same top, 3,800 for a while. So are we going to break out, or are we going to break down? So it's either going to be up here or down here. It would need Apple's help to be up here. It would need Google's help to be up here, and I'm not sure where the good news is going to come from. Again, I sound like a bear, but these are just bearish signal, and they all fit. Maybe I'm making them fit in my head, but they all fit. So that's the NASDAQ look. So to say we covered that. FDX, I think it was in the news recently too. Look at that giant jump. I'm not going to touch that. It's done it before, and it run up like right this here. I got away with murder right here. I was shorted, and then I got out for a small profit, and that was awesome. So eKicks, I thought I expected it weak. It didn't. I'm going to try to reshort it again. I'm just throwing a couple $100 at it just because I've seen it do it before and it's just too juicy. Look at this. Look at this. Look at this. So this is the long run. This is the long run, and I have no idea what it's running on. It trades so super thin that it's so ridiculous to be able to trade it. But if you get lucky, it's one of those home runs that pays for a whole year worth of lottos. So I'm going to try it again. I'll post it, and we'll go from there. BLK, I haven't touched it in a while. Same as boy, this is looking a little cup and handle-ish, so it might have some upside from here if banks come back into favor. Ralph Lauren, Coors, everything was in the news today. So yeah, I'm not touching retail. They have too many. They move in unison these days. One company comes out with bad news, everybody sells off hugely. Usually there is a sympathy, but the sympathy here is getting ridiculous. So I'm stepping away from that. So overall, let me circle around. I don't see doom, but I also don't see giant leap up. I see room for upside, but it's going to be contained. I see the bulls and bear. It's a more even game, so we're going to tend to fight over the lines for a while and then move away from them, either up or down. And the last move away was from the 1900, and probably the next one will be lower. So to stay in this range bound. If so, then the iron condors, selling premium with iron condors work best. That's why I stepped out to December to sell something for a lot of premium with a lower chance of success, theoretically speaking, but logically speaking, it should withstand, given the overall picture, the test of time. If not, I'm ready to move it and close it and defend it. So the overall theme is try to sell risk outside of those ranges that we're playing. That's why every day it's so important for me to spend hours trying to find the ranges within the week and then trying to maybe formulate an opinion over the overall run. So the weekly ranges don't I don't sell December based on what I saw this week in the weekly ranges. It's a day to day. You never know what happens overnight. So the weekly ranges play out usually, headlines aside, and just play them. If you're not certain about anything, send me a message. You've all sent me messages before, and I've gotten back to all of you within minutes, if not within an hour or two, just as long as I have internet connection. I don't leave anybody hanging. Requests get answered, and if I don't, I usually tell you by when I could. So I do want more questions. I am getting a lot of questions, and I'm getting education questions like, what does that mean and how can I use it going forward? So it's kind of like teaching how to do it versus giving you fish or whatever that thing was. So teaching how to fish rather than feed you fish. So it's the intellect of the members, so the whole group, is, as far as stocks, is really improving. I love it. We have some really astute people here trading some nice trades and sharing them with me. Thank you very much. Keep it coming. And if anybody has any questions about tickers I don't cover or a specific situation, please let me know. I know I get requests and I try to answer them as quickly as possible. And sometimes I answer them publicly. Sometimes I answer them directly. I am providing more public information just because I do have thousands of people that follow me on MarketFi, whether they're members or not, but I don't share anything that's proprietary. Members get the jump on everything. Videos, notes, write-ups, insights, messaging. You guys get priority over everything. So I do appreciate your time. Sorry about this one. This one's about 45 minutes long, probably a little too long for everybody. And but I am running out of energy and I'm dragging. I will talk to you later. Oh, anyway, if you need to reach me directly, you can reach me through the MarketFi messaging system, or you can reach me at sellspreads@gmail.com. That's sellspreads@gmail.com.